in this video we're going to be covering cash budget for grade 12, right? So in this case I'm doing an activity, right guys? So the activity is as follows, right? So you're saying that the task collection schedule, right? And then you are provided with the information related to GNA stationers, right? And then you have to look at what your required information, like what are you required to do, right? So in this case we are required to do how many questions? Let me see. From 1.1 until 1.6, right? So the first question says, why is it necessary to prepare the task collection schedule? Why is it necessary? So let me go answer the question here. So they're saying that you have to ask yourself a question like, why is it necessary to prepare the task collection schedule, right? Meaning, for example, we can say that a business uh, needs to work on how much cash will be collected from their customers on their projected sales, right? And another reason is that it can help the business to do what? To prepare the cash budget, right? So here are my two responses, right? And they are very, like, there are many answers to this question, right? So my answers were like, a business needs to needs to work out on how much cash will be collected from their customers based on their what projected sales, right? And also it can also help the business to prepare what the cash budget, meaning the data collection schedule will be used in the what will be used in the cash budget, right? Yeah, if you think of any solution, as long as it is relevant to the question, therefore it will be correct, right? Now in this case we are asked to prepare what the task collection schedule for the month of what January, February and March, right? Now in this case we are given information from November, December, January, February and March, meaning you have to calculate our credit sales, right? Meaning we have two types of sales, right? So let me write here, we have two types of sales, right? So our total sales is equals to what? Credit sales plus cash sales, right? Meaning total sales is what? 100%, right? Meaning the credit sales will contain of a certain portion, and then credit sales will contain of another portion, unless if the goods are all purchased on cash or all purchased on credit, right? Now let's go to see the information here, right? So they're saying that our total sales for October is 236,000, and for November is 240,000, December is 360,000, January 432,000, February 400,000, and yeah, respectively, so right? And then these are what our total sales, right? And then our credit sales contains of how much? 65%. So when we're doing our the tax collection period, schedule, we are looking for our credit sales, right? How am I going to get my credit sales for November? So I'm gonna say, okay, my November total sales is 240,000, so I'm gonna say 240,000 multiplied by what? 65 over 100, right? Meaning which method am I using here? We have what is known as the Cremora method, right? The Cremora method says the given amount, which is 240, multiplied by what you need over what you have. Meaning the given amount is 100% because it's what total sales. What do we need? We need 65%, right? Yes. We're going to say what is the total credit sales. So I'm gonna say 240 multiplied by 65%. I'm getting 156,000. So 156,000 is my what? Credit sales for November. So I'm gonna come here and say 156,000, right? So I'm gonna do the same with what? December. So I'm gonna say 360,000 multiply by what? Multiply by 65 over 100. What am I getting? 360,000 multiplied by 65 over 65 over 100. I'm getting 234,000. These are the credit sales for what? For December. 234,000, right? And then what about let me calculate January, February, just here. So I'm gonna say for January, I'm having 432 multiplied by what? 65 over 100. And then February, I'm having 400,000 multiplied by what? 65 over 100. March, I'm having 368 multiplied by what? 65 over 100, right? So I'm gonna say 432 multiplied by 65 over 100. Therefore my credit sales for January are 280,800, and then for February 400,000 times 65 over 100, I'm having 260,000. And then for March, 368 multiplied by 65 over 100, I'm having let me write here 239 200. So 280 800 for January, 280 800, and then for March is 239 200. And then what about February? February is 260,000. So my February is 260,000, right? Now in this case, guys, in order for you to complete your what the tax collection period, you have to read the following information, which is here, right? Here, right? This will guide you on how you should complete your what the tax collection period, right? So here they're saying that debtors are allowed 30 days to pay, and then debtors pay according to the following trend, right? So they're saying that 30%, they settle 30% in the accounts in the month of sale, right? Meaning, for example, if I purchase goods on credit on October, I'm gonna pay how many percent? 30% on October, right? And then they're saying 45% in the following month, meaning I'm gonna say for October I'm gonna pay 45% when? November. And then 18% in the second month following the month of sale, meaning for December I'm gonna pay how much? 18%. But if you can see, guys, in total we must pay 100%, right? So this percentage plus this percentage plus this percentage gives us what? 93%. So therefore the other percentage would be for what? Bad debts. As they explained here, they're saying that provision is made for bad debts in the third month following the month of sale, meaning for January we're estimating 7% of what? Bad debt. This is for October, by the way, right? Meaning when we're going to November, they're gonna pay 30% in the month of November, 45% December, 18% January, right? Meaning, what is the other information that you need to follow? You have to follow this information. We're only collecting for January, February, and March, right? Now let's start with what? Let's start with November, right? So for November, we're saying that 30% will be paid in what? November, right? And then what's the other percentage? The other percentage is 45%. So 45% will be paid in December, right? And then what about the other percentage? 18% will be paid in what? January. So therefore 18% will come here of what? Of the November credit sales, right? So I'm gonna say, okay, my November credit sales is 156,000, right? 156,000 multiplied by what? 18%. Therefore that will be my collection for January. So I'm gonna say 156,000 times 18%. I'm getting what? uh, okay, now we're going to what? We're going to December, right? Now for December we're repeating the same process over and over again, right? Let me erase here. Why is it not erasing? Okay, okay, let me just leave it. Okay, now we're going to December, right? So we're saying that, okay, 30% in the month of December, right? And then we're saying 45% on the following month, which is January, and then 18% on what? February, right? And then for March there will be a what? What is it? um Bad debts, right? So bad debts will fall on the month of what? On the month of March, right? So in this case we're going to account for bad debts on the month of March when it comes to December payments, right? So therefore this one we're not taking into account. So I'm gonna say, okay, for the month of January I'm gonna pay 45. The debtors are gonna pay 45%, right? So I'm gonna say, okay, the credit sales for January, I'm gonna take the credit sale for January and multiply that. So credit sale for January are 208, 200 and, 234 multiplied by what? 45%, because this is 45% we're going to pay it on the month of January. So I'm gonna say 234 multiplied by 45%, and then I'm getting what? 105,300. So I'm gonna come here. Okay, for January I'm having 105,300, right? And then for the month of February I'm gonna pay 18%. So 18% of this amount of 324. So 234 multiplied by 18% is coming to what? February, ne? So I'm gonna say 234 multiplied by 18%. So I'm having what? 42 120, right? Remember here it will be bad debts, but we're not taking bad debts into account when we're collecting, right? Here we just want the collections from our debtors, right? Now let's go to the month of January, right? So the month of January is already here, so therefore 30% that is paid on the month of January we're taking it into account. And then there was a what? There was a 5% discount there. This thing doesn't want to erase. Let me write on the other side. What is the amount of January? 280,800. So I'm having 280,000 280,800 multiplied by what? Multiplied by 30%, right? And then multiply by what? They're saying that they're taking out 5% discount, so I'm gonna say multiply by 95 over 100. Therefore that is what? The collection for January. 280,800 multiplied by 30% multiplied by 95 over 100. So I'm getting what? 80,028. So if we come here, let me show you where was the discount, right? So they're saying that 30% settle in accounts in the month of sale and receive a what? 5% discount. When you're settling in the month of sale, you're getting a 5% discount. That's why I said 95 over 100, right guys? then we're coming here. So for January, my collection will be 80,028, right? Now let's take the other ones into account. The following month will be 280, 800 multiplied by what? 45 over 100, which is 45%. So I'm gonna say 280, 800 multiplied by 45 over 100. So I'm getting what? 126, 360. This is my collection for uh, February. So I'm gonna say 126, 360. Right now, the collection for March in the January sale is gonna be 18% here, right? So I'm gonna say 280, 800 multiplied by 18 over 100. 18 over 100, which is what? 50, 544. 50, 544. Right? Now we're going to the month of what? February, right? So February, we cannot sell goods on February and collect by January. That does not make sense. Meaning if we sold goods ka February, we will collect from February going forward. Meaning we can collect for what? January. You can't sell something today and collect money yesterday. That's not possible, right? So we're going to say, okay, we sold our credit sales is what? 260,000, right? So we're going to collect in the month of sale, which is February, which is 30%, right? And then taking what? Discount into account. So I'm gonna say, okay, 260,000 multiplied by 30% multiplied by what? 95 over 100, meaning I'm taking what? The discount into account. So 260 multiplied by 30 over 100 multiplied by 95 over 100. So therefore I'm having 74,100. 74,100, right? And then in the following month is March. So therefore 260 multiplied by 45%. 260 multiplied by 45 over 100. So I'm getting what? 117, right? And then I'm coming here saying 117. Yes. Now we sold the goods when? On March, right? If we sold the goods on March, we can't collect that on January or February. We're going to collect from March going forward, right? So the percentage here, it will be what? It's going to be 30% and taking discount into account because it's the month of sale, right? So the March amount is 239,200. So 239,200 multiplied by 30% multiplied by 95 over 100. I'm taking discount into account. Remember, discount is 5%, guys, and then the amount is 100%, right? Meaning if I take discount into account, I'm gonna be left with what? 95%, which is what we want. That's what I'm saying, 95 over 100, right? Don't get this wrong, guys. So 239,200 multiplied by 30% multiplied by 95 over 100. So I'm getting what? 68172. Getting what? 68172, right? So I'm gonna get my what? Total collection for January, total collection for February, and total collection for March. So my total collection for January is 280 plus 105 300 plus 80. Therefore this is my collection for what? January. You must also always show this collection. This is 8, by the way, 8. You must show your collection. You must add these three amounts, then you get your total collection, right? 42120 plus 126360 plus 74 And then my collection for February is what? 242,580. And then for March, 50,544 plus 117 plus 68,172. So I'm getting what? 235,716. Right? So guys, the following information here, if you can see, this information will be taken where? Will be taken to our full cash budget, right? That's why I'm saying that this preparation of the data collection period it can help the business to prepare what? The cash budget, because the following amounts will be taken where? To the full cash budget, right? And then you can see that, okay, from our total sales, meaning our projected sales, it will help us to determine how much are we going to collect from our debtors, meaning we collected this much from January, and then this much for February, and this much for March, right? So yeah, that's what I'm saying. Any response is correct as long as it's what? Relevant, right? So in this case, they're saying that we must calculate our cash sales from January, February, and March. This is one of the simplest thing ever you'll ever find in the paper, right? Now let's go to our cash sales for what? January. So our cash sales for January is 360, is what? 432, right? So I'm gonna say, okay, 4 3 432,000 multiplied by what? Remember, what is our cash sales? Our credit sales. Our credit sales is 65%, right? So our cash sales, remember, total sales is 100%, right? And our cash sales is, credit sales is 65%. Now, what is our cash sales? Our cash sales is 100 minus 65%. So I'm getting what? My cash sales being what? 35%. So I'm gonna multiply by what? 35% here, right? So in this case, so 432 multiplied by 35%, I'm getting my amount as what? 151,200, right? So my amount is 151,200, right? So this is my what? Total cash sales. So 151,200, right? Now what about my February sales? I'm gonna go to my total sales for February. So February I'm having 400,000. So I'm gonna say 400,000 for February multiplied by 35%. 400,000 multiplied by 35%. That's my cash sales. So which is 140,000. So I'm gonna have 140,000, right? And then what about March? I'm going to March here, which is 368. So I'm gonna say 368,000 times 35%. So 368 times 35%. So when I say 128,800, 128,800, right? So guys, in this case, you can also say, okay, this is my what? Credit sales, right? So you can say, okay, my credit sales, this amount multiplied by what I need over what I have. So I'm gonna say multiply by 35% over 65%, because this is what? Credit sales, meaning what you need over what you have. But don't complicate things. If you don't understand that method, just go straight there, right? So in this case, they're saying, okay, they calculate the following, right? They're saying that the estimate bad debt to be written off for the period of January, February until March, right? So I'm gonna say, okay, we want the bad debts we want the bad debts from January until when? Until March, right? So in this case, what are we going to say? We're gonna say, okay, let's see amounts here. We're gonna focus on our sales. Where is our sales? Let me see. We have our sales, which is okay. So let me calculate this first. So I'm gonna say 432 multiply by, okay, 25%. Okay, now in this case, guys, they're saying that we should calculate our what? We should calculate our um total estimate bad debts, right? So our total estimate bad debts, we're going to say, okay, we're going to say one for January, we're going to say 100 and 153,400 multiplied by what? 7% of what? The 7% of um the 7% of the bad debts, right? That is to be written off, right? And then for the month of November, we're going to say, okay, 156,000 multiplied by what? 7%, right? And then for the month of December, we're going to take that amount, right? We're going to say, okay, we're gonna say 2 3 4 1 2 3 multiplied by what? 7%. Then you calculate these amounts. The total amount are going to go to your what? Are gonna go to your bad debts, right? So I'm gonna say 153,400 times 7%, right? So I'm getting what? I'm getting 10,738,156 times 7%. I'm getting what? 10 920 234 times 7%, which is what? 16380. Alright, guys. So you're gonna say what? You're gonna add these amounts, right? So these amounts, when you add them, you're gonna get what? You're gonna get let me see, 38,038. Let me confirm first. So 738 plus 163. Yes, you're gonna get that amount, right? So what are we gonna do, guys? Right? How did one might ask, how did you get the 153,400? How did you get 156,000? How did you get 234? So you must read this question, guys. They're saying that we want the estimate betters to be written off for the month of what? January. Now let's come here. Right? Now let's come here. We're having what is known as a credit sale, meaning this thing starts when? This thing starts from October, November, and December, right? Meaning, if you can see, guys, let's come here. So if we can see, let's say we are here, guys, right? So remember, this is the month of sale, right? And then this is the month following the month of sale, right? And then this is the third month, right? And then what is this? This is the what? The bad debt, meaning the 7% out of what? The sale that we made on October. So meaning the sale that we made on October, we're going to collect on October and collect on November and collect on December, but on January we're not gonna what? Collect, because it's what? Bad debt. If you can see here, they're saying what? They want the bad debts for what? The period of January. So therefore the uh, bad debt comes from what? The October sale, which is on January, right? That's why I said what? Okay, my October amount, which is 236 multiplied by what? When I multiply by 65%, when I'm multiplying the October amount by 65%, I'm getting what? 153,400, which is this amount, 153,400. Now you do so on and so forth. You're gonna go to um November sales, right? You're going to the November sales now. Okay, I sold maybe let's say on credit on November, right? Now we're gonna collect on November in the month of sale, collect on December in the month following the month of sale, and collect on January on the that month following the month of sale, right? And then on February we're having a what? 7% bad debt, right? So therefore that's why I'm using these three amounts, because when I'm calculating them, I'm gonna get my bad debts percentage for January using the October one, and then for November I'm getting bad debts on February, and for December I'm gonna get my bad debt on March, because I'm collecting here, and then the month following is here, and then the third month following is here, and then the bad debts is gonna be here. That's how I got that, right? In case you did not get how I got the amount, right? So now they're saying that okay, to the total estimated amount still owed to what, that still owed by our debtors, right? Meaning, what is the amount that our debtors owe us, right? So if we go to our debtors collection schedule, if you can see here, for November they paid everything. If you can see proper, for November they paid everything, right? For December they also paid everything, because this was like it was like from here, it started from the month of sale was December, the following month of sale was January, another month of sale was February, from there, right? So if you can look here, which is January, the month of sale is January, and the month following the month of sale is February, and the that month following the month of sale is March. What about the 7%? The 7% is outstanding from what, January, right? And if you go to February, the month of sale was February, and the month following the month of sale was March. And then what is the remaining that they didn't pay our customers? The remaining that they did not pay is what, the percentage that were outstanding. Meaning, here we paid 30%, here we paid 45%, and the remaining one here was what, 18%, plus the 7% of the bad debt, right? Now if we come to the March one, March, here they paid 30%. On the other months, what is outstanding? Since they paid only 30%, what is remaining? 70% is the amount that they did not pay, that they owe us, right? So we're gonna come here and say what, we're gonna come here and calculate those two amounts using the percentage that I got there, right? So I'm gonna say, okay, for January we only owe them for January our customers only owe us what, 7%. So I'm gonna say 280 800 multiplied by 7% that is owed by our what, customers, which is bad debts. And then we have, for February we have 260,000 multiplied by what, the 18% plus the bad debt that they owe us. So 18 plus 7%, which is what, they owe us 25% here, right? And then for March we have 239 200 multiplied by the 70% that they owe us, right? Okay, now what is the amount that I'm getting for January? I'm getting, okay, this plus this times this, so I'm getting 19,656, right? And then for February I'm getting what, 65,000, right? And then for March I'm getting what, 167,440. Then I add all these three amounts, I must get the total amount that is outstanding, that the debtors owe us, right? So I'm gonna get what, 252,096, right? Now we move to what, refer to the what, January sales. Refer to the what, January sales. Now I'm going to my January sales. Okay, here are my what, January sales. Here they are, which is 432, right? Okay, they're saying calculate the percentage increase in the sales. Meaning, guys, if they say you must focus on the January sales, which is how much, two, where's the January sales, 432,000. Okay, we have 432,000, right? So they're saying that we should calculate the percentage increase in the sales. So what is the percentage that increased in order for us to get the January sales, right? So there's this method called CPP, right? Meaning that when you're calculating the percentage increase, you use the what, CPP method, right? Which is what, current minus previous over previous, right? Now what is our current amount? Our current amount is the January sales, right? So the January sales, which is 432, right? So I'm gonna say, okay, my current amount is 432, and I'm gonna subtract out my previous amount. So my previous amount is the previous month sales, which is December. So I'm gonna go to December. December, we have 360,000. I'm gonna subtract 360,000 here. Okay, I divide by what previous, which is 360,000. Then I do what? After getting the answer, I multiply it by what? 100%. Right? So I'm gonna say, okay, 432 minus 360,000. Okay, I'm getting 72,000. So 72,000 divided by 360,000. I'm getting 1 over 5. So 1 over 5 multiplied by 100. So I must multiply by 100 on this whole thing, right? Please, the formula must have multiply by 100%. So I'm multiplying by 100. So I'm getting what? 20% increase percentage, right? So this is the what? The increase of what? 20%, guys. So always, guys, when you are asked to calculate your percentage increase, with which method are you going to use? You're going to use the CPP method, current minus previous over previous, right? So in this case, they are saying that, oh, why are the January sales predicted to increase then slowly decline from February? We need to know why is there, why, what happened. Now let's go to maybe let's say a scenario here so that we can see what does our business deal with, right? So if you can see here, okay, so they're saying that, okay, we already know that our company deals with what? Selling stationery, right? So our company is known for selling stationery, and then they're asking us, why are the January sales predicted to increase and then slowly decline from February? So one of the reasons is that the business sells stationery, right? Even though they did not give us a scenario that is going to help us maybe to determine what happened and whatsoever, one of information that I have here is that the company sells what? Sells a stationery. So we're gonna say what? The business sells stationery. But in most cases, guys, in the exam, usually they always give us what? They always give us full information, right? And another thing, guys, since the company sells stationery, we know that, meaning when our school closes, stationery will not be sold. I don't know if you get what I'm saying. So in this case, we can come here and see, okay, yeah, the question says, why are the January sales predicted to increase then slowly decline, right? So since our company sells stationery, right, meaning when the school reopens on January, meaning many people will what? Purchase stationery. But when we go to the month of February, meaning people are already going to school and whatsoever, who will purchase stationery? No one, right? So you can also say that, okay, January is the beginning of the year. January is the beginning of the year, right? Which is before school opens or start, right? And they predict that stationery will increase on January, right? So you can, any response that you give, as long as you are relevant, you can say, okay, the company sells what? Stationery, right? And then we know that the only thing that's gonna cause our January sales to increase is because the school reopens on what? January, right? So therefore we anticipate that the January sales will increase, but February sales will decrease because why? The school have already started operating and people went to school, such things, right? Now we are going to our what? Debtors collection policy. Now we are going to our debtors collection policy, right? So they're saying that comment on the debtors collection and give us an advice, right? So when you're identifying from these collections, you can see, okay, let me go to the collection here. Okay, so my collection is here. Okay, so they're saying that debtors are allowed what to pay for how many days? To pay for 30 days, right? And then they're saying that debtors pay according to the following trend, right? So they're saying that 30% in the accounts in the month of sale, like so on and so forth. That's how our debtors are allowed to pay, right? And in this case, that we are saying that we must comment on the debtors collection period and give them an advice, right? So we can say that okay, 75% of our debtors really does pay in the month of sale. Only 75% of our debtors pays in the what? In the month of sales, right? And then another response is that 18% of the debtors settles the account after 60 days, and 7% in what? um 90 days, right? Meaning which is the month following the month of sales, right? And then when our customers pay in the month of sales, we must do what? Charge them interest on overdue accounts, or we can also send a statement before the end of the month. And then so we're saying that although most of our debtors are settling their accounts in 30 days, more can be done with 18% and also 7% and whatsoever, right guys? So yeah, this will be the end of our video, guys. So please don't forget to like and subscribe and comment down below if you have any question or you want me to do any other question, right guys? Okay, thank you guys.